February 2nd today. Perfect. And it is, I was actually told, and I didn't realize that this is actually a leap year. Today is Groundhog Day. And apparently we have spring coming early this year. So, really good news. I wanted to hop on here today to chat a little bit about a very, very important and popular topic right now, especially in the market climate that we're in right now. In this different economic, in this current economic cycle, we have, of course, interest rates being talked about at every single turn possible when it comes to economic data, when it comes to FOMC meetings with the Federal Reserve, Jerome Powell. And anytime you're having conversations with your prospective buyers, clients, sellers, what have you, the main talking point for the most part is usually always interest rates. Okay. So today we'll talk a little bit about, again, just interest rates, kind of where they're currently at. But most importantly, for our current homeowners, and of course, people buying homes and that will be homeowners here into the new year, we want to make sure that you are set up for success and you understand all of the different benefits, options, advantages, and possibilities that are going to be made available to you here, whether it's immediately right now or here into the very immediate future in the spring, summertime, and then, of course, wintertime 2024. So, first, where are interest rates currently? Okay, so we have seen, luckily, over this last few months, really since like December time, we've seen a really nice drive down or downward trend in the interest rate market, right? So obviously, very, very welcome, very, very good thing to see here in the market for the real estate industry, right? We want to try to make sure that when we are, and again, this is one of the very, very important reasons why you want to work with a local mortgage broker, someone in your community that is providing the best both interest rates and cost structures and limited fee structures or no fee structures to your buyers, right? So at the end of December is when we started seeing a nice downward trend in interest rates. Of course, they've continued to trend down since then. Now that's kind of flattened out a bit, so we've seen some more consistent rate pricing over this last week or two. But we have to keep a close eye on that as we're starting to move forward into the springtime. Okay, so where are rates currently? Again, that's going to very much depend on obviously the current qualifying borrower, right? So where are there? Remember, when you guys are talking about interest rates, you have to remember that each and every single borrower, qualifier, and opportunity is going to be drastically different. One question that I don't see people ask, and as they're talking about interest rates, is what kind of loan are you even talking about? If someone is telling you that they're quoting 5% interest rates right now in this market, they're quoting a FHA loan. Okay. There are no conventional rates in the 5% currently. Okay. So you need to make sure that you're asking the right questions so you're being given the right education and information first. Okay. So where are interest rates currently? That will very much depend on the borrower, buyer, or opportunity. And again, what program or, type of loan you're trying to qualify for. So with conventional loans currently, we're seeing rates somewhere in the mid to high sixes, depending on the qualifying scenario. That would be with limited or very low, discount points or buy downs needed for that. And then as you start getting into the FHA scenarios, you're going to see rates more in the 5 to low 6% range. Okay. Very similar to VA as well. VA, again, another government programming option. So FHA and VA will follow very, very similar pricing structures, right? So, that's where rates are currently, right? Now, we've all experienced over the last 12 to 18 months some very, very creative strategies of how we can put home buyers into the most affordable options possible right now with different temporary rate buy down programs, with different permanent buy down programs, so on and so forth. So we want to make sure that we're still emphasizing and focusing on putting all of the hard work in for our buyers to put them in the most affordable positions right now. But just overall, that's kind of where rates are currently. So make sure that when you're talking to, your mortgage partner or your real estate agent, that you are asking the right questions. What type of programs are you talking about that you're qualifying me for? What type of fees are associated, discount points are associated, so on and so forth? And what should I expect on my loan estimate or closing disclosure when I get ready to close, as far as my cash to close. All very, very super duper important. Now, that brings me to today's topic of choice that I wanted to discuss a little bit, and that is, when is it time to refinance? Okay, so again, all of you guys that are current homeowners that did not already own a home and refinance in 2020, 21, and early 2022, you're going to be sitting with an interest rate somewhere currently between 5 to 7.5 to 8% if you purchased in the last 18 months. Okay, so that means that there is a very, very large demand and appetite for homeowners that want to refinance and lower their current mortgage interest rate and current monthly mortgage payment. Okay, if you're working with the right mortgage partner as you made that home purchase this last 12 or 18 months, you should have already been prepared, explained, and provided a strategy for when that should be, hopefully. And then, of course, what a mortgage refinance is. What does that mean? What does that do for you? What are the costs associated to a mortgage refinance? What, you need to know and understand all of the different moving parts. But again, we have a very large sector of people, of homeowners currently, like I said, that have purchased over the last 12 or 18 months that are waiting and looking to refinance. Okay. So why I wanted to make this video, oh, actually, hold on one second. Let me plug in my, my charger for my laptop before it dies. Hold on one second, guys. Give me 1 second. Okay, I'm back, team. Okay, so back to where we were talking about now, getting into the refinance here for this new year. Okay, we already know, obviously, and it actually amazes me how many of you, just in the, just regular general population, people that are not in the real estate industry, are keeping such a close eye on interest rates. And it's such a staple of conversation these days, I feel like, with just regular people, right? Everyone's talking about interest rates and how high inflation got, inflation coming down, our interest rates coming down, things becoming more affordable, not affordable, et cetera, et cetera. So it's a very, it's a big staple of current conversations, in the general public right now. So you want to be educated and empowered. So are you refinancing right now? Okay, we're heading into the March FOMC meeting where we do not believe that there is going to be the first rate cut in March. There's like a 20 to 30% possibility of that happening per Jerome Powell or Fed data. And we are anticipating that the first Fed rate cut, which will then start seeing and putting pressure on the interest rate market to be pushed down sometime in the June or July FOMC meeting. Okay, so we're still a few months away, but does that mean that you wait until then to refinance, or do you start looking into mortgage refinance now? Well, that's a great question. That would very, very much depend on your current situation with you as a homeowner, what your financial situation is, and what are your goals. Okay. In my personal opinion, if I were a homeowner that needed some immediate relief with either skipping a monthly mortgage payment or two, or paying off some of my higher interest credit card debt or other debt through a cash out refinance with my home, or, maybe I closed and purchased a home in the high to, or, mid to high 8% range or what have you when you purchased a home last year through another lender that wasn't me, because we never offered those rates, but that's fine. That's why you come to me for the refinance and the decreasing rate. But let's say that you did that. Now would be a decent time to start considering and start planning or plotting for a mortgage refinancing without having to wait too much longer. Okay. So that would be the one kind of general overview of why it may be beneficial to take a look now. However, for most of you, for 90+% of you, I would highly advise you to, at the very least, get in contact, have communication with, and speak to the mortgage partner that helped you with your home purchase. Or if they're not contacting you, like I'm keeping in touch with all of my clients, all of my past referral partners and everyone that I've helped purchase a home over this last 12 to 18 months, I'm reaching out to them to let them know it's not the time just yet to refinance, guys, but it's coming up. Okay. We want to make sure that when we start seeing that downward pressure being pushed on the interest rate market, when that first and second federal interest rate decrease happens, that is the time when rates will start making a big enough move down to make a mortgage refinance as worthwhile as possible, right? So start getting that interest rate reduced. Total monthly mortgage payment being reduced via the interest rate move down. Then potentially, depending on how long you've been in the property, maybe there's an ability to go from FHA to conventional and remove the PMI. But we want to try to make sure that we're doing basically a cost benefit analysis on our end to make sure that it is as worthwhile as possible. And the break even point for what those costs associated to the mortgage refinance is, that you're recouping on the side of savings from your new mortgage, okay, versus what you're currently paying. So I know that, you know, this is one thing too that I have a lot of dialogue with not just my clients, but my real estate partners when you're working with a mortgage lender, mortgage partner, that you want to make sure that they're treating you more than just a number, more than just a application, and more than just a paycheck, okay? I could be reaching out to so many different people right now to get them refinanced right now, knowing that in March, April, May, June, October, whenever the case may be, we should see some dramatically improved interest rates, right? So that person, if they refinance now, may have to do it again in, the springtime, summertime, or wintertime, right? Do I want you to do that? Do I want you to have to refinance twice if it's not necessary? No, I don't, because there are costs associated with a mortgage refinance. Okay. You work with the right mortgage partner, right? Again, local mortgage lender, broker in your area that's not charging you all of the other junk origination fees, processing fees, underwriting fees, so on and so forth. So to make sure that your mortgage refinance is as affordable as possible, because you're always going to have title fees. You're always going to have to reestablish a new escrow account. You may have some prepaids for interest if you're closing that's not at the very end of a month. You're always going to have some closing costs associated with a mortgage refinance. Okay. Now, the difference is with a mortgage refinance rather than a home purchase is on a mortgage refinance, you can include those costs in a traditional FHA refinance, in a traditional conventional refinance, in a traditional VA refinance. Those closing costs can be included in your new loan amount so you don't have any out of pocket expense, but that does not mean that there is no cost to refinance. Okay, so make sure. I know a lot of these lenders and online banks or whatever, they get, I don't want to say tricky, but they get clever with their wording. Okay, so it's important to make sure that you understand what that wording actually means. A no cost refi or a no out of pocket expense refinance. Okay, so just make sure that you're asking the right questions, or most importantly, just working with a trusted mortgage partner, somebody that has your back, somebody that's setting you up for success, and someone that's explaining and educating throughout the process. Okay, so if it were up to me and if I had an immediate dire, oh my gosh, I need to skip a payment or two, or oh my gosh, I need to get this payment as, some immediate relief, or I do want to start paying down or paying off some of my high interest credit card debt or other debt through a cash out refinance, now may be the time to do that. However, I would recommend start a conversation, get in touch with your mortgage partner, have them put you on a plan. Okay, taking a look at what you are currently paying on that most recent monthly mortgage statement as far as your interest rate. Okay, where in March, April, May, June, July, August, as rates downward pressure starts happening, when does it become most beneficial to you, the homeowner, to refinance? All right, guys, that's all I got today. I just wanted to shed some light on, again, the importance of not being just a number or a transaction. It's a relationship that you should have with your mortgage partner. Make sure that they're setting you up for success, and make sure that you are asking the right questions. All right, guys, Mario with the Escobedo team, your local mortgage experts. Let our family help yours. Do not hesitate to call, text, or email. I'm available to you guys day and night. Have a wonderful Friday, guys. Happy beginning of February.